Hi and welcome to my channel. For those of you new, my name's Dave and I work in financial services, and these videos are a mixture and journey towards my financial journey, towards financial freedom, financial independence. We'll cover investment products and we'll hopefully cover financial well-being so you can also reach your financial goals and financial aims whenever that be sometime in the future. Now let's get into this latest video. So this video is about my stocks and shares ISA account with AJ Bell. Start of the month, we had a valuation of £57,113. Going along quite nicely. In February, obviously events in Russia and Ukraine, dramatic effects on our portfolio, somewhat reduced in value. So at the end of the month, it was worth £55,709, a loss during the month of £1,404, year-to-date return of minus 7.2%. The aim of the portfolio this year is annual growth return of 10%, annual dividends of £1,200 during the year, and a year-end value of £80,000 from initial starting value of £60,000. We look at the following chart. We made contributions during the month of £500. Contributions for the tax year to date are £19,477.70p, and during the month of March we will put in the remaining funds, and the first time ever we will use our full ISA allowance of £20,000. And during the month we received dividends from one of our providers, £22.51 towards our target. Okay. During the month we agreed fees with our platform provider of £10.31, and across our 9 holdings the dividends yield across them shares is 3.88%. Now we will only cover the dividends from our shares. All our funds are in accumulation units and they will be reinvested automatically. If we look at the portfolio, a quick overview: 60% in the UK, 24% in Americas, and nearly 16% is in Asia. Predominantly based in financial services. Reasons for that I'll go through later on the shares, but a collection of shares. And if we look at our shares in value, 9 shares, 6 in profit, 3 in loss. £23,770 in shares makes up 42% of our portfolio, of which 39.5% is in the FTSE 100 and 3% is in the FTSE 250. So predominantly UK based, predominantly financial based. But it was bought, obviously we look at the UK as a sector, we know about the UK, but it was bought for good companies, good dividends, and hopefully reach our target of 10% year on year. Now remember, if you like the videos, smash the like button, subscribe to this channel so you can grow or reach a wider audience. Now let's get into some of the holdings we hold within our portfolio and recent events and the reasons why we hold them portfolios. With regard to our shares, we own 9 shares. Our largest holding is Lloyds Bank. We own 13,500 shares, makes up £6,500 of our portfolio, nearly 12%, but during the month had very good results. Annual dividend declared, or a final dividend of 1.33 pence against 0.57 in 2020. Year dividend, or 2 pence for the year, will give us a very nice dividend in May, but great results, profit margin increase, and hopefully some kind of manoeuvre moving forwards, albeit the banking sector not being loved in the past, but who knows what will happen to it in the coming weeks and months. But back in profit and a dividend being increased. Our next holding is Legal & General, the insurer, 1,602 shares, £4,800, makes up nearly 9% of our portfolio. Safe, secured, guaranteed. Everyone needs insurance, and hopefully next month in March it will give us good returns, good results, and it will pay a very nice dividend. Our next holding, again another insurer, is Aviva, 944 shares, nearly £4,000 of our portfolio, 7%, and hopefully during March it will give us very good results it will give us a very good dividend, but also will hopefully give us some kind of share buyback or a special dividend, as it is very cash rich and one of the reasons why we hold it moving forward and we hold such a substantial stake within the portfolio. Our next holding is Barclays Bank, 1,479 shares, £2,700, nearly 5% of our portfolio, and again, very good results. Pre-tax profit of £8 billion for last year. Last year it gave a final dividend of 1p. This year it's given final dividend of 3p. So hopefully, good sentiment towards that shares moving forward, but very cash rich, and dividends will hopefully grow and will be invested back into the portfolio. Our next holding is Sainsbury's, the retailer, 788 shares, £2,200, makes up 40% of our portfolio. And then again, back to the banking sector, we own 231 shares in HSBC, £1,200 of our portfolio, 2%, but again, very good results. Quarterly dividend or final dividend of 13p, but it was done away from the UK concentration as a worldwide bank. And then also NatWest, recently topped up during recent months, 445 shares, just over £1,000, makes up 2% of our portfolio, but again, a very nice dividend declared, final dividend of 7.5p a share, and hopefully, as it was also recent results, they will sell some shares, and also the government will reduce their stakeholding, so the shackles will be off, it give it more of a free rein. Our next holding is Card Factory, the retailer, 1,997 shares, £985, 1% of our portfolio. It was very cash rich, has struggled in the last few months with debt. The debt's been addressed. Hopefully, will be cash rich. It still is opening new shops, and hopefully once the dividends restrictions are lifted in 2023, dividends will be declared, special dividend will be increased, but a very long-term hold. I'd say before the pandemic, it was very cash rich, it was showing very nice profits, and it did pay a good dividend, and it did pay a good special dividend also. And then finally, our smallest holding is our current platform provider, AJ Bell, 237 shares. We did have a holding of £1,000, now down to £732, just over 1% of our portfolio. It did give us a dividend a month, it did give us special dividends. The numbers have been great, new customers, assets on demand are great, but for some reason the shares have gone dramatically in free fall during the last few weeks. So I say collection of shares, some good shares, some bad shares, but during the month we've had some great results from the banking sector. We've had some great dividends declared, and hopefully it will give us our objectives of £1,200 dividends towards this year's portfolio. And all the dividends will be reinvested into current shares we existing hold. So hopefully it'll build us some kind of momentum in the coming weeks and months. Now, if we look across the following chart for our funds, an overview of the holdings we own. So at the moment we own 13 funds, 8 in profit, 5 in loss, numbers being reduced to the month, but 57% of our portfolio is in funds, makes up nearly £32,000. Now during the month we have topped up one of our holdings, we increased one of our passive adventures funds, we put £500 into that, one for diversification because we were so UK based. Not going to go through all 13 funds, but just an overview of our largest holdings and recent events. So our largest holding is the technology fund, £4,800, makes up nearly 9% of our portfolio, but a very nice profit since we bought it of 39%. Our next holding is a passive adventures fund we topped up, £4,500, 8% of our portfolio, a small profit of 7%, but it was done, reduced fees, and it was done for diversification. Our next holding has somewhat struggled recently is a global equity fund, £3,700, nearly 7% of our portfolio, but a profit to date of 7%. Our next holding is a US smaller companies fund, £3,300, nearly 6% of our portfolio, but a very nice profit of 12%. It was bought away from the tech stocks, a big multinationals in America. Hopefully, sentiment will improve towards US smaller companies and it will meet our objectives moving forwards. Our next holding is slightly selective. Bally Gifford Positive Change, £3,200, 6% of our portfolio, but a profit being reduced lately, but still showing 9% since we bought it. Our next holding has somewhat struggled recently. It's a China fund, £3,200, nearly 6% of our portfolio. China's had a poor 2021, it's carried on 2022. The fund is down 20%, but hopefully China will be a long-term player and market sentiment will recover in the coming months, coming weeks. We've got no reasons why we're going to reduce that fund. We may even top that up, but unfortunately China is not at the top of everyone's favourite list of funds during the past months. But who knows, hopefully market sentiment will return. And again on that basis, we've got an emerging market fund, £2,000, 3.5% of our portfolio. It was in profit till recently, it's now shown a loss of 5%. But again, like China, seems to be on love the past few months, but will be a very long-term player within the portfolio and its objectives to reach the 10% year on year. Other funds we own an AIM fund, we own a second emerging market fund, we own a UK equity fund, and our smallest fund, who knows what will happen to it moving forwards, but we own a fund in Russia. We did put £500 in. It was up to £600. At the moment, it's at £466. 0.8% of our portfolio, a loss of 7%. But the fund has now been suspended because of what's happened in Russia and Ukraine. Who knows what will happen to that fund over the coming weeks and months? Who knows what will happen during the conflict in Russia? But thankfully, it only makes up less than 1% of our portfolio. But it did have some good companies, some great oil and gas companies, but obviously being completely affected by recent events. And as we said, being suspended, who knows when it'll be trading in future and what will then fund by UV. So it's something we will watch moving forwards, but it will be held for a long term. We will not be selling that fund because of recent events, shall we say. So a quick overview, some good funds, some bad funds, shall we say, only because of recent market sentiment. But it makes up nearly 60% of our portfolio. And across our funds and across our shares, we've struggled the last month, but hopefully it will meet our objectives of 10% year on year. And as we've proved from some great results, dividends being increased, and will hopefully meet our targets of £4,000 for the year for 2022. Now remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.